Hi, it's Nero here from Investment Rise, and as our property boom just continues to roll on month after month, I am now seeing many first-time investors looking to jump into the market. And look, personally, I think it's a great time to start your investing journey, but there are some areas you need to avoid, all right? And look, sometimes the easiest way to find the best areas to invest in are to first know which areas to stay away from. Okay, now before I reveal which areas to avoid, let's begin by looking at the data from CoreLogic for the price growth across Australia as at October 31. So here we have the CoreLogic RP Data Daily Home Value Index, the monthly values for the 31st of October. And what I want to look at first is in the houses column. What you can see is that Sydney had 30.37% growth for the last 12 months, but in the last month there was only 1.62% growth. Okay, now if I multiply 1.62 by 12, I'm going to get somewhere around about sort of 18-19% growth. Still good, but it still shows that price growth in Sydney is starting to slow. Melbourne price growth was 19.5%, but only 1% in the last 12 months. Brisbane price growth 26.03%, but in the last month 2.76%. Adelaide 22.48% growth for the last 12 months, but in the last month 2.16%. Perth did well, but last month was a bit of a dip. Now I'd like to see if that's going to continue or if this is just an aberration. So I'd want to see next month's data before predicting anything about Perth. All right, but if we now look at the unit market and compare. Houses were in Sydney 30.37%, units 13.5%, Melbourne 19.5% house price growth, but units 9.23%. You can see if you compare any individual city, house price growth has definitely outperformed units. All right, and I think if there's one thing that COVID has shown us, it's that the average Australian prefers houses over units. Okay, but then you might be thinking, well, if I can't afford a house, then maybe I should look at an apartment. And after all, buying an apartment is better than having my money sitting in the bank doing nothing, isn't it, Nero? But is it? I mean, that's the key question, right? Is it better to buy an apartment rather than do nothing? Okay, now, mind you, if you're someone who's already decided, look, I'm looking to buy a house as an investment property, stay with me because what I'm about to reveal will also affect your choice of which suburbs you choose and which ones you avoid. But let's get back to the key question of, should you buy an investment property as an apartment, especially if you can't afford a house in a particular suburb? Well, let's look at the two factors that should really determine that decision. First of all, what's the primary key factor that has driven capital growth over the last 12 months, maybe even 18 months? It's been demand from owner-occupiers, okay? Demand from people who want to live in an area. Everything else, the low interest rates, the significant infrastructure in investment, etc., everything you can think of has all been there to really enhance and support owner-occupier demand, okay? That's what's been the primary driver of capital growth. So now, think about it this way. Let's say that someone's looking to buy a 4-bedroom house because they've got a couple of kids and they need the space, and they can't afford a house in a particular suburb. Do you then think that family will go, well, we can't afford a house in this suburb, so let's squash everyone into maybe a 2-bedroom apartment on that 17th floor of that new apartment tower that's going to come in, right? Do you think that's what they're going to say? Or are they more likely to say, look, let's maybe move out to maybe an adjoining suburbs or even a few suburbs away, or maybe even look to move out of Sydney, out of Melbourne, out of the area that they're looking at as their first choice? Now, the data clearly shows that over the last 12 months, last 18 months, people have chosen to move out. They have not chosen to compromise on their lifestyle. They have not chosen to go and live in an apartment. They've rather said, look, let's just leave this area completely and move out to another area that we can afford. Now, what I just said there, if you really understand it, should really determine your property investing decisions going forwards, because you want to look at, well, where are people able to afford? And if you remember the growth rates that I showed you from CoreLogic just a little while ago, you'll recall that it was our smaller capital cities, Brisbane and Adelaide, that are showing stronger growth month on month and at the moment than our larger capital cities, because what's more affordable? Okay, so that's the first thing. Coming back to our discussion about apartments, are people likely to compromise their lifestyle? No. But then you might be thinking, but Nero, immigration's about to begin, right? And we know that, there are units are in high demand from people who come from overseas. Yes, but what's the other thing that's then happening? You need to understand that when it comes to apartments, developers can increase supply very, very quickly, right? They can build large towers. And look, think about it this way. A developer doesn't come in and just say, oh, look, we've only got demand for, say, 3 floors worth of apartments, so we'll build those first 3 floors. Then we'll wait till they're all sold and full, and then we'll build the next 3 levels or 4 levels. No. They're going to come in and build as many levels as they possibly can as council allows them to. All right? And then they'll create that oversupply, and then they'll wait for it to be filled at some point in the future. Now, governments are going to support this because it's almost the only way they can be seen to addressing the affordability issue that we have now almost all around the country. Okay? So that's fine. But as an investor, you need to be aware of this. You need to understand where is this oversupply coming, and you need to stay away from it. Now, again, if you're thinking, but Nero, I'm looking to buy a house, so why would I worry about data about apartments? Stay with me. It is going to affect you in 2 ways. But going back to apartments, it's because of the ease at which these apartment complexes and areas with lots of apartments can go into oversupply that there are many investors who bought apartments in Sydney and Melbourne and even Brisbane in it's 2016, 2017, so 4 or 5 years ago, who today can't sell their apartment for what they bought it for, despite the fact that we're in the midst of a significant property boom where house prices are rising the fastest they have in over 30 years. Okay, so you need to be aware of the oversupply. And now I'm about to go into the top 10 areas you need to avoid from an oversupply perspective. But before I do, if you're new to my channel, hit that subscribe button, hit the notification bell so you don't miss out another video, because I post videos almost every week talking about all things related to property investing. So now let's have a look at this article from October of this year, which says, suburbs in New South Wales, Victoria, Western Australia, South Australia and Queensland, where property prices will plunge. Property owners in these 10 suburbs across Australia are going to miss out big time thanks to one unfortunate factor. Now, we know what that factor is. It's oversupply. The article then goes on to say, although Australia's property market surpassed a valuation of $9 trillion on Thursday, some property owners are going to miss out big time. New market research shows that 10 suburbs across the country are possibly the worst places to invest in over the coming years because of apartment units being oversupplied in those areas. Unfortunately, homeowners in those postcodes might not experience the same windfalls as the rest of the country. And as an investor, you need to know this information. A list from joint research done by Riskwise Property Research and Buyers found that 3 suburbs in New South Wales and Victoria, 2 in Western Australia and 1 in both South Australia and Queensland are in the danger zone. The report released on Tuesday warned that apartments were a death knell for some homeowners. Now, let's have a look at what those top 10 suburbs are. So in New South Wales, it was Schofield, and it's the suburb with the most amount of oversupply coming in the entire country. It's 115.7% of existing stock. So that literally means that they're going to more than double the number of units in Schofield right now. What do you think that's going to do to capital growth, right? Then in Victoria, we've got Box Hill, where they're going to increase the amount of existing stock by 25.5%. Western Australia, Subiaco, 46.4%. Then New South Wales, we come to Gosford, Central Coast, a very common place for a lot of investors to buy in. They're going to increase the supply by 28.2%. Footscray in Victoria, 27.5%. Okay, let's look at then New South Wales, Rouse Hill, 88.2% increase in apartments. All right, so now these areas, you want to avoid these areas like the plague. But what if you say, okay, well, I'm just not going to worry about the apartments now, I'm going to buy a house in these areas. Well, consider this. you're still going to be competing with the same tenants. Now, of course, there are some tenants who are going to prefer houses over units, yes, but the premium you can charge for renting a house is not going to be as high as in other suburbs, because the tenant will start to see, well, how much extra do I want to pay for a house versus maybe renting a unit which has, extra increased security, all the mod cons, maybe a gym, maybe a pool. Remember, a tenant doesn't pay for any of those things, right? It's the owner of the apartment who pays for that via the strata cost. The tenant doesn't. They get to use it essentially for free, right? And so even if you're buying a house in these oversupplied markets, you are going to face challenges from a rental return perspective. And remember, when you're buying investment property, you want both capital growth and the strongest rental returns you can get. And I think from a capital growth perspective, as this data starts to become more widespread, as people start to realize, oh my God, there's so much oversupply in these suburbs, even the growth from houses is going to come down, because people will say, well, do I really want to live in these suburbs where there's so much oversupply from units, right? It's going to enter an owner-occupiers thinking. And remember, demand is coming primarily from owner-occupiers. That's what's going to give you the long-term demand. So you really need to know these areas and avoid them like the plague. But back to apartments. If you are keen on buying an apartment as an investment property, really look at the supply and demand. Avoid the areas that I just mentioned. Avoid them like the plague. But then ask yourself this. When you looked at the data earlier on, it was very clear that house price growth is outperforming apartment price growth, right? I mean, you could have bought an apartment in Sydney and you would have done way better if you'd bought a house in Adelaide even, or in Brisbane, okay? So then ask yourself this question. Should you really be buying an apartment? Or should you do some further research, maybe get some professional help, and actually buy a house in a growing market? Because the odds are you will make more money. Hey, thanks so much for watching. If you found this video valuable and you're thinking you might like my help to help you find an investment property, then head on over to nerocall.com to discover our unique 5-step process that's helped my private client group purchase now well over $66.2 million worth of property. And then if you like what you see, you can book in for a half-hour phone consult with me personally. Either way, thanks again for watching.